Next, allow me to invite Dr. John Baffes, Senior Agricultural Economist from the World Bank, USA. He is online with us, so the floor is yours.
Good afternoon, everybody. Let me first express my thanks to the Arab Fertilizer Association for extending the invitation to me. Unfortunately, circumstances prevented me of being there in person. I did participate in person a couple of years ago. I really enjoyed it. I hope in the future I will be able to participate in person. At the World Bank, I'm in charge of a small unit analyzing and monitoring commodity markets. So my objective for the next few minutes is to show you, to guide you through our view about the global economy, as well as developments, risks, and outlook in commodity markets. Before I continue, I just wanted to ask the moderator, do my slides show in your screen? Hello? Are my slides showing? Yes?
John, we lost you. Can you repeat the last paragraph?
Yes, I'm asking whether my slides showing in your screen. Is everything fine so I can continue the presentation?
Okay.
John, do you hear me?
Yes, I can. Can you hear me?
Yes, okay. Just you can maximize your presentation. We see it, but it's small. You have display setting at the top.
Yes.
Yes, this. Click on it.
Can you see it now?
Yes, it's fine now. Okay.
Okay, good. Thank you so much. I'm sorry for the mishap. Okay, I would like to share you a few slides on the global outlook and the outlook for commodity markets and the risks. And let me first begin of how the global outlook in the global economy looks. The slide I'm showing you represents the developments, or rather the growth for the global economy for the last 8 or so years. And here we can see the stability that global growth experienced from 2016 until 2019, with an average global growth of around 3%. We had the pandemic shock that interrupted the global economy in 2020, which brought down global growth at minus 3.4%. And in 2021, the world experienced an unprecedented sort of rebound in growth, which was much more than expected previously, with an average of 5.5%. And we expect growth to continue strong at 4.1% in 22, the current year that is, and around 3.2% next year in the year 2023. Now, just let me also highlight the fact that those projections, although have been published recently by the World Bank, they have been published in mid-January, with the events that are unfolding in the East Asia, in East Europe and Central Asia, there are considerable downside risks to those growth projections. So we wouldn't be surprised if the world experiences much less growth this year and the coming years compared to what I'm showing you in face of the uncertainty that we face from the geopolitical front. Let me now move to commodity markets and focus on two commodity sectors that are relevant to fertilizers: the energy, which is a key input to the fertilizers markets, and agriculture, where fertilizers, most of fertilizers are destined. Here we are looking at nominal prices for the two main indices, energy and agriculture. Energy consists pretty much from three main energy sources: oil, crude oil, natural gas, and coal. Oil dominates the energy market, as we know, and our energy component here. And agriculture includes all commodities produced by the agricultural sector, which means we are including, of course, all the food commodities such as grains and oilseeds, some beverage commodities, and some raw materials. What we see is the relative stability, so to speak, that commodity price and most commodity sectors enjoyed between 2015 and the pandemic, the negative shock of the pandemic early in 2020, and the stronger than expected rebound in after the pandemic around the mid of 2020, which meant that commodity prices sort of followed the income growth rebound that I showed you earlier. And today, commodity prices, or most commodity prices, I would say, have reached levels that we have not seen since the spikes of 2011, 2012, or even earlier, the spikes of 2007 and 2008. Now, just to a small observation, the charts that I'm showing here, they include the data up to January. As we know, in February, a lot of commodities, especially in the second part of February, a lot of commodities increased much more. So what we're going to see next month is that this chart is going to show us much higher levels of commodity prices. Let me focus a bit on energy prices. Now, to the left, we see oil prices, which following an average of around above around $100 per barrel prior to the collapse of 2014. Following 2014-2015, oil prices have been averaging since then around $55 to $60. But of course, we saw what happened this year. They have increased last year, rather they increased to $70, $65 to $70, and now oil prices are averaging around the close of $95 per barrel. The prices I'm showing you here are in nominal terms, so if we convert it into real terms, probably the average prior to 2014 would be in the neighborhood of $125 per barrel. And if we're comparing that to the recent average of $95 per barrel, we are still around $30 below what we experienced prior to 2015. So oil price has increased a lot, but we are still not up to the levels that we experienced prior to the collapse in 2014. What's more interesting, more important in the energy markets, as that's relevant to both agriculture and fertilizer prices, is that what we experienced recently is that coal prices and some of energy prices, especially LNG and natural gas prices in Europe, have literally skyrocketed. Coal prices are currently traded at twice the level that they used to be traded prior to the spike that we experienced in early of last year, and some natural gas prices, especially the natural gas prices I'm showing you here in Europe, they are trading at 5 to 7 and sometimes 10 times as high as they used to trade early in 2020. So that's a very sort of drastic development, seismic, I would say, shift in the energy markets, because of course, both coal and natural gas are key inputs for the fertilizer markets. They are key inputs for agricultural markets. They are key inputs for electricity generation, and that has sort of generated kind of shock waves within the agricultural commodity markets. Let me move now to the global food outlook and see how it has evolved the last few years and what are the prospects. When we're comparing the growth of food outlook, and here I'm showing you grains and edible and oilseeds, when we're comparing the growth, the expected growth for the current season, that is the 2021-22 season, we see that for this season, the season's outlook is pretty much in line with the average growth that we have experienced for the last 30 years. And in the charts that I'm showing you, the growth food outlook for this season is represented by the blue bar to the far left in or in both charts, while the average growth of food supplies is represented by the red lines, and we can see that the last bar in each of the two charts is pretty much the same level as the long-term growth for grains and oilseeds. So a key question, of course, is why are food prices so high, given that the global supplies for this season are pretty much on average with long-term growth rates. Now, before I answer this question, let me also try to compare what is today's food situation, food outlook situation, compared to the recent history, that is the past 20 years. Now, in food commodities, some of you perhaps know that we use a metric that tries to assess whether the global supplies compared to demand is in a healthy situation or the global markets are well supply, and this is the so-called stock-to-use ratio. And that metric basically looks at how much inventories we have at the end of the season compared to how much consumption we expect to experience throughout the season. This ratio typically fluctuates between 20 and 30%. And for the current season, we can see that this ratio is 28% or 0.28, which is the last bar in the chart that I'm showing you. Now, this ratio reached a high record level of 0.31 or 31% back in 2017. Now, when we look at the history of this ratio for the past 20 years, we also see that we had another record in 2000, which was also 31%. But between 2000 and 2006, this ratio dropped from 0.31 to 0.17. The point that we clearly see here is that although the supply conditions are a little tighter now compared to demand than what they had been compared to the recent past, that is 2016 and 2017, we by no means are in a situation that we experience in the spikes in the global supply and demand conditions of prior to 2006 and 2007 that we all know led to the food price spikes of 2008 and 2010 and 11. So to summarize, in terms of aggregate supply and demand conditions, we do see a tightness there, but the tightness is by no means comparable to what we experienced back in the past decade, in the earlier decade that led to the spikes. And again, that now brings me to my earlier point, why we are experiencing so high prices for agricultural commodities, and especially for food commodities. And of course, the answer is that we experienced high energy prices, especially coal and natural gas that I showed you earlier. That has fed into fertilizer prices, and we can see here in this chart, and of course this is the subject of the conference, of the skyrocketing fertilizer price that we've experienced throughout the past year, and that is the main reason as to why we see very high food prices. Now, in terms of risks, before I conclude the presentation, we have, of course, the most important risk in agricultural markets, which is input prices. Another risk that may materialize, and this is kind of a bit of a longer-term, medium and longer-term risk, is biofuel production. We have seen, or rather we experienced a huge growth in biofuel production back towards the end of the last decade. Biofuel production, in terms of share of energy production, has sort of stabilized the last 4 years. We saw the decline, we experienced a decline in 2020 because of COVID and the rebound here. But the issue, the larger issue in biofuel production is that a lot of countries have announced ambitious plans and policy actions consistent with the ongoing energy transition. And if those plans and policy actions materialize, I wouldn't be surprised if we see huge quantities of agricultural and food commodities diverted to biofuel, which kind of gives us a second big risk. And again, this is medium to longer term risk for higher food prices in the coming years. And in terms of overall risk, I explained the risk for agriculture. On the energy side, the risks are concentrated among 4 or 5 sort of areas. The first energy side is what is going to happen in the US shale oil sector. We did not see a rebound in the US shale industry that we expected for a number of reasons, including the fact that banks are not willing to lend as easily as they used to in the United States, and the fact that shareholders of companies, of US shale companies, are preferring to have higher returns rather than expanding output. A second item that's going to play a big role in the output of energy is, of course, OPEC, and whether OPEC and OPEC Plus is going to sustain the cuts rather than they have been introducing. They are in place since April of 2020. A third issue is whether we're going to have any more COVID outbreaks like the Omicron, which can put further downward pressure on global growth trends. Geopolitical developments is the most important, I would say, issue, and I cannot elaborate any more about that. There we experience very high prices because of trade restrictions and trade disruptions, but it's a very high uncertain area. We have to wait a little and see how the situation in Central Asia and Eastern Europe is going to unfold. And lastly, in terms of energy, the big question and the big risk is the energy transition, which certainly is going to see less fuel use, and of course, it's going to see more use by other commodities, and that includes metal commodities. In terms of agricultural risk, I elaborated on them. Higher input cost is the key risk, of course, for energy and fertilizers. I said earlier, more demand for food commodities in terms of because of biofuel production, and the geopolitical developments are going to play. They could play a potentially big role in agriculture, and that's because of we have it can affect directly because the Central Asian, some of the Central Asian countries, including Ukraine, Russia, and Kazakhstan, they play a big role in grain markets. They can play a big role, of course, indirectly through the energy and fertilizer markets, and of course through disruption in trade. So with that slide, I would like to end my presentation. I would be happy to share my presentation directly with you or through the Fertilizer Association, can share it with you. And my presentation, including all the data that I used in the presentation, are publicly available online, and you can certainly download them for free. And I would be glad to share anything you would like to share with you directly. Again, thank you very much to the Fertilizer Association for inviting me to present a brief outlook on commodity markets and the global outlook. And I would be happy to answer any questions you might have. Thank you very much.
John, thank you very much for this.